Struff. Welcome back. I have another Alex joining me today.
This is Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
Today's episode, I wanted to bring you on. Really excited to have you here. I thought we would take a different turn and talk a little bit about disability insurance, which is nobody's favorite topic, but it's an important one. So the more attention that we can shine on it, I think the better. I think it's often one of the forgotten parts of financial planning is we think a lot about what if we die or we have money for our family, and that's of course life insurance. But a lot of times we neglect the conversation of what if I get hurt? I'm still alive, which is great, but I can't go to work and I can't earn income and I can't support myself and my family that way. So to start us off, what got you into this industry or what got you interested in talking about that with people?
Yeah, thanks for the time this morning. I feel like insurance is not something that people choose. It chooses you. I was at a carrier for 4 years that writes disability insurance organically, and the perception of disability insurance was I don't need it unless I get hit by a bus. That was the mentality for myself at 24 years old. And then my buddy at the time that I was living with, he's like, hey, you should come be a disability wholesaler and you should buy it on yourself. And so I became a disability wholesaler and I didn't buy it on myself right away. But then within 2 weeks, I learned pretty quickly the 3 reasons why everybody doesn't buy it were the 3 reasons why I didn't buy it. And I quickly realized they weren't factual. And so those 3 reasons are it's never going to happen to me, right? That mentality, we're invincible. I don't need anything because I have it through work. And then the other one is the cost factor, right? It's too expensive to protect your income. And 2 weeks into my job at the carrier on the disability side, I actually bought my own policy or took the app for my advisor, who's a good friend of mine, because I realized those things weren't true. There's thoughts, right? There's opinions. They're not objective, they're subjective. And I quickly realized that 90% of the reasoning why people go on claims in the industry wide is not because they get hit by the bus. I don't know if you've ever met anybody that have been hit by a bus. I have not, but I also don't live in New York.
It is that's the example everybody uses. Well, if I get hit by a bus and die, or if I get hit by a bus and don't die, it's, it is one of those things where everybody thinks it's not going to happen to me. I think
Right.
especially as men in our 20s, which you and I have exited the 20s, but thinking back, you do feel invincible, right? Like you're healthy just naturally. You didn't do anything to be healthy. You just are young and healthy, and that's great. And until somebody close to you or you go through an experience yourself, you start to feel like this. You start to understand the risk that's on the table that you're not protecting.
Yeah, and I think, I quickly realized the data was not showing me that probability-wise, all these insurance carriers for all these different products, they have really smart people called actuaries that know the data. So the probability of getting hit by a car or getting in a car accident itself, I don't know what the data is on getting hit by a car, but car accident was like 1 in 86. So I live in Iowa, you live in New York, you probably have a higher probability of getting hit or getting in a car accident because that's different population sizes. I might hit a cow.
Cars.
There's a few cars, a lot of pigs,
mostly
a lot
tractors.
Of cows. Some tractors that could cause some serious problems, man. I don't know if you've hit a tractor, but you're done for. And I was like, man, so what causes disability? And it's 90% of the claims are sickness. And for me, I'm 33 going on 34 here in a month. And within the last 6 years, I've witnessed friends that have gone out on claim, and it's due to a sickness. They're in their 30s, and some of the stories, I always share stories because I think they're relatable and it helps just paint the picture for people, clients out there. One of my really good friends, almost 3 years to the day, called me when my son was born, and he told me he had brain cancer at 33 years old. And so it rocked my world. Luckily, he had bought a supplemental policy 4 years earlier, which is great. The tumor ended up being benign. And so I bring up that story because, hey, this guy's 33, he's healthy, he's got a family he's got to take care of, and all of a sudden he's got brain cancer out of nowhere. Wakes up and he's got ringing in his ears, and normal checkup becomes, hey, you have this huge tumor on your brain. And the unfortunate thing about that story is that it keeps going. Last week, I was going to Miami. I was coming home, and my wife was texting me when I was on the tarmac, and she let me know that my buddy's wife now has stage 3 breast cancer and started chemo that morning. And she's 38, 3 kids. And this guy had just got diagnosed 3 years prior for brain cancer, and he's good. He doesn't have to, it's benign. He doesn't have to have surgery. But now his wife has stage 3 breast cancer and starting chemo literally that morning. And her plan is the next 6 months, she's going to have chemo every Tuesday, and then she's going to have a double mastectomy. And so it's rocked their worlds. And as you as a financial advisor, you understand if the finances aren't in order, it causes a lot of stress. And I think that disability insurance is one of those things that is necessary, because right now, the last thing that client needs or that person needs is wondering where's the money going to come for paying for their everyday bills, but now the new bills that are coming.
Yeah, that's a horrific story. And it's stories like that do tend to motivate other people to take action. And I think it probably affects all the people in his life that he knew that he's sharing the story with. And it might make some of those concerns seem more real. And it's, we're having this conversation, people are listening to it. And I never want to sound like we're scaring people into taking action. That's not how you want to conduct a business. That
Right.
being said, if you're listening to this and it scares you into it, good. You should be scared a
Yeah.
little bit.
Yeah.
That's interesting. So those stories motivate you to do what you do. And
Yeah.
correct me if I'm wrong, your sole focus is disability insurance. You don't do life insurance or anything else. You are 100% on the disability insurance train, if you will.
Yeah, I'm all in. And I think that the reason why is because I have a passion from just an understanding of the implications of people not having a plan. It's one thing, life insurance, I think in the financial industry is talked about. You get married, you have kids, you buy a house, you have a bunch of debt from college. I think but people are understanding that they die. It's inevitable. So I need to protect my life and replace income. But on the other side, disability insurance just isn't thought through.
Yeah.
So my conversation with people is if you get cancer, there's 2 options. Either you're going to fight it and then you might be out of work for an extended period of time, like my friend's wife, or you're going to die from it. And so you can't just have one side of the equation funded and not the other one. And I would say the life insurance side, like you said earlier in the video, you die, you're out of the picture. So here's some money, you're out of the picture. If you become disabled, you get a front row view of what life's going to be like, where maybe your spouse goes back to work if they're not working, or they have to pick up extra hours, or their only funding is GoFundMe, or their only funding is maybe their group policy. And you just get to see, you get a front row seat of the financial instability that is now created because you can't go to work. That's unfortunate.
Yeah. So you bring up an interesting topic, and that is the group policies. And I guess there's 2 different types of people that I talk to as an advisor. There's people like myself who are self-employed. They don't have any kind of employee benefits. So the burden and responsibility is 100% on me to go out there and get a plan. And what I see is 2 scenarios. Either it's completely neglected and they don't get any insurance, and then that's obviously a problem. It can be a greater problem if something happens. Or scenario 2 is I find that person actually does a better job when they do get insurance of getting adequate insurance. They're usually covered as much as they can be, or they've got a pretty robust policy. So there's 2 extremes for the business owner. On the other side, we have the person that has a traditional W-2 job. They have benefits through their employer, and they get the fake safety blanket or the good warm fuzzy feelings of saying, oh, I have that through work, I'm all set, which creates a different issue that they're probably not actually all set. They have something, and that's great. It's better than nothing. But very rarely do I see that W-2 person actually have all the insurance that they need, because they're not thinking they need to go out there and supplement it. They don't think they need to talk to somebody like you. They think, hey, I've got it already. I'm all set. So that was a long-winded statement to set up a question of, like, which is worse? Do you find that you are being more helpful to the person that's self-employed that doesn't have anything, or to the person that was just ignorance is bliss and they thought they were all set, but they weren't?
I think that I would say that most policies are supplemental policies, meaning they have an underlying benefit through their employer, and then we're supplementing it on it. And there's a couple of reasons why. I think, like you said, the business owner or the independent person that doesn't have employee benefits for whatever reason, it's all on them to financially protect their income, right? So you're going to go buy a disability policy that everything is on you. That this when you're an employer that has a group LTD contract, you're that a lot of that group LTD contract is subsidizing the risk and the cost. And so you just have to supplement a little bit versus maybe a lot. The problem with the group LTD contract, again, I had a group LTD contract. I was at the carrier side for 11 years. Is that when you do in benefits, what you enroll in your benefit packages, you don't actually know or care to think of through what does LTD actually mean? What does it actually pay me? You care about your health insurance and probably dental insurance. And because that's what you use, right? You're going to care about what you use, and your healthcare and your health insurance is very expensive, generally speaking. That's your biggest portion from an insurance perspective. So when people enroll every year, they may say to you, Alex, hey, I have group LTD. And if you ask a rebuttal question to that, what do you get if you go on claim? They have absolutely no idea. They might know their life insurance. Maybe it's a flat 50, maybe it's 1.5 times their salary. But my advice to every financial advisor is, my question rather is, do you supplement what they have in life insurance? If so, why? And shouldn't that be the same on the disability side? We know that 50 grand of life insurance or 1.5 times their salary is not enough. We know that. So we supplement with private, individually owned policies. And the same should be said for the group LTD, supplementing on top of that, so that you really don't have as much of a gap in coverage. And again, just like a 401k, you talk 401k, Roth, the group policy is a taxable benefit once received because you're not paying for it as the employee, the employer is.
Yeah, I'm glad you brought that back to taxes because your conversation reminds me of talking about, like, let's first recognize what you have through your employer. So let's actually take time to educate ourselves on what your employer is giving you, because that has to be the first step. And I think it's similar to when I have conversations with clients about how to save for retirement or how to invest. It has to start with a tax conversation of, like, where are you in a tax bracket? So tax planning starts with knowing your tax bracket. Insurance planning has to start with, what do you actually have right now, and is there room to supplement it? So I think that's a really good jumping off point.
Yeah, I just think people, again, it's not their fault, but you don't have people sitting down with you and running numbers and helping you understand. So there's an ignorance is bliss kind of mentality. And so what I do for clients is I make math really simple for people. Maybe they don't like math. I just say, okay, let's imagine you make $120,000 on a gross basis. It means you make $10,000 a month. The average group policy replaces 60% of monthly income on a taxable basis. So you went from making $10,000 down to $6,000, and you pay taxes on both those numbers. So can you afford a $4,000 loss in gross income to pay for everyday bills you have today, save for retirement, and oh, by the way, now you have medical bills because you're on claim. But medical insurance doesn't stop. You keep paying medical insurance, and you keep paying for the doctors to help you with whatever sickness or severe injury you have.
Sure. No, it's a substantial pay cut to take. And yeah, I think that's good advice overall. I can't imagine. Yeah, I can't imagine an argument for not having it. It's just the ignorance is bliss. And the truth is, we can sit here and say, oh, people should know better. And that's easy for us as advisors or people that do this every day to say, like, how are you not thinking about this? But the reality is, most people are not thinking about their finances every day. They're certainly not thinking about their disability insurance policy on a regular basis. And they probably don't have either the knowledge or the desire to read through the fine print and figure it out. At some point, it comes down to they need to find a professional they trust. They need to go to someone like you and say, hey, Alex, here's my employee benefits packet. Can you read this for me and tell me what I should do? And then you're able to come back and say, hey, I read through it based on this. If I were in your shoes, I would recommend X, Y, or Z type of insurance. This is what's going to cost you. This is the benefit should something happen. And then it's a decision to make. I don't think anybody that I talk to on a regular basis wants to actually, myself included, I don't want to be the expert on disability insurance. I want to go to somebody like you and have you sift through it.
Yeah, I think you let the pros be the pros, right? I'm not a financial advisor. I'm not a car mechanic. I outsource that because I don't have the bandwidth. You only have so much bandwidth in that brain of yours. And if you're a financial advisor, there's a lot of moving pieces. If you're a car mechanic, there's a lot of moving pieces with technology and everything like that. I don't want to do that. Disability is something that I strive to be better at and learn more as more things come out in the different carriers and the contracts. And from a cost perspective, people hate insurance, and me included, you included, I would assume, right? Nobody likes insurance. My philosophy is insure the things you can't afford to lose. You might not be a person that insures your cell phone or your pet. There are insurance products to do that. I don't insure my phone because if I need to go buy a new phone, I just get on the new 3-year plan at Verizon and I just pay for it monthly. But I can't afford to lose my house, my car, my income, and my life. Those are 4 things I can't afford to lose because it has a ripple effect in the rest of my life financially.
Yeah, it's a little off topic. When I think about this every time I go to a store and buy like a new couch or something, a piece of furniture, they always try to get you on the way out with buying the extended warranty or
Yeah.
the insurance plan. And I had the same conversation with whoever's with me that day or the insurance guy. And I'm like, why would I insure my couch? Like, I'm not buying expensive couches. Maybe somebody else is. But if I spend $800 on a couch and a hole gets poked in it because I sat down and there's something sharp in my pocket, that sucks. I'm not happy about it. But like, I can go buy a new couch. I do have $800 somewhere I could use for a new
Yes.
couch if I needed to, or I slap some duct tape on there. I'm good to go. I can afford to lose it. But my home, my life, all the things you rattled off, I think it's a different perspective. So I like that idea of insuring the things that you can't afford to lose or can't afford to replace.
Yeah, and I think people are so just inundated with just getting hit with insurance plans on everything they buy nowadays. They're
It
just
adds
like,
up.
"Oh my gosh, it's a lot."
Afford to
Couch,
insure
right? You're like, "Geez, it's a couch."
the couch, it's the cell phone, like it's protection. Like I go to Target and buy a toy for my niece, and I get, hey, do you want to buy the protection plan for this? I'm like, it's a $30 piece of plastic. If I run over the car, I'll get another one. It'll be fine. But
Yeah.
let's change topics a little bit. So we talked a lot about, I guess the first section of this episode is really advice for people in their own financial planning. Maybe we'll call it client facing. I also get a ton of questions from other financial advisors. It's happened a lot through LinkedIn, but I have calls weekly with usually younger advisors that are reaching out for some kind of advice. And one of the things I think that's hard when you enter this industry is you wear just so many hats. You walk in and you need to
Yeah.
learn everything there is to know about investments, retirement accounts, true financial planning, taxes, social security system, Medicare system, health insurance plans through work, life insurance, disability insurance. And my advice to them a lot of times is to focus on what you really want to be the expert in and learn that thing better than anybody else, and then start to outsource things. So, to pull back the curtain here a little bit, I don't directly do any insurance at this point in my career. I refer that out to people that can handle it because they are better at it than me. They're more knowledgeable than me. They will serve the client better than I will. And it takes it off my plate so I can focus on what I am the best at. So, do you have any advice? I know you were never a financial advisor. You didn't come up through that channel of the industry, but do you have advice that you would share with younger advisors that maybe you witnessed working close with them or anything like that?
Yeah, I think this industry is really cutthroat, and the survival rate or the make it rate in the financial industry is really low. And I think some some models are changing, and they have to because if you're 23 years old, you come out of college or whatever your age is, what's the probability of you making it? It's low, and because again, you have to bring in assets and maybe sell a product possibly to make ends meet. And so what I tell young advisors are is 2 things. One, partner with a more senior advisor that can maybe help you bring you along to meetings so you can get the flow of everything. Right. You're just book smart at this point at 23, right? And that doesn't really equate to real life as we know. So you need experience. And so you're not going to get experience and survive if you're not partnering with a mentor or like a senior advisor within your practice or your network. And then the second thing I always tell younger advisors is if you're 23, the odds of you landing an individual that's in their 40s or higher is very unlikely because realistically, they probably know more than you when it comes to investing their money. Not always, right? But the reality is, it's probably true because you're only book smart at this point. You don't have any real life experience of helping for the most part. And so, what I always told young advisors is there's 3 things that your network at 23 needs. They need to open up a Roth IRA, probably throw in a little bit of cash into that a month. They need life insurance and they need disability insurance. And the reason I say that is they might not need it today. The life insurance, 23, you're not married, kids, whatever it is, but you're the healthiest you're probably ever going to be at 23. And so there is value in locking in a longer, maybe not as much of a face value term, but you can go write a couple $100,000 term policy on it and then ladder in some other stuff later down the road as you get married, have kids, have more dads. So that disability insurance is a need today, always, because someone has to pay your bills. Even at 23, you have bills and you have to pay for it. And I think those 3 things will create an understanding for your natural demographic of people at that age group to help you succeed as well.
Yeah, it is interesting. Just I've been doing this for 12 years and going through the growth in the career, you start off as a very young person out of college and you look around at what we call the natural market. So your friends,
Yeah,
family, people that might do business with you are 12 years younger than they are today, right? So
yeah,
the average person I'm talking to that was a 22-year-old kid out of college that was drunk at the bar every weekend and had no money, not really anyone's ideal client, but you got to start somewhere. So going in and having a conversation about why disability insurance is important, why they should be putting a little extra cash into a Roth every month, and like letting those people grow with you is important because it's really hard
yeah,
to go out there and convince somebody in their 50s or 60s to trust you with their life savings. So I think you start where you're at, and then if you can survive long enough in this industry to get to the point where your friends and family are 10 years older and making money and doing things, there's more opportunity. But
yeah,
that's
100%. I
a
love
whole
that
topic.
conversation because obviously you want people to succeed. And I think the mistake that often is playing, this is because of the industry just in general, is you have the 23-year-old hunting for the 50-year-olds because they're the ones with the money. Again, they're not going to probably give you their money unless they're your dad, cousin, they're a family member of some sort. And so if you're only hunting for the whale, you're going to fail out. You need to look at this as a long-term play and invest in your natural market, knowing that these individuals will grow with you, which means they'll make more money, which means they'll invest more money, which will make you more money, obviously, as an advisor. And so I think it's the first few years are an absolute grind from what I've seen from my vantage point, but it's really rewarding watching people grow with you.
Yeah, it is definitely a grind. I can confirm that. And it's one that you look back and you start to remember all the things you went through as a young 20-something-year-old trying to make it in this business. And then it flips on you. This is part of the experience I've had that I've alluded to a little bit through LinkedIn recently. I've had all these young advisors reaching out to me, and I'm not sure when it happened, but at some point I went from that young and experienced advisor grinding every day to suddenly, I don't think I'm old, but like I'm old enough that people look at me as like the experienced advisor and like they're soliciting advice from me, which is a cool feeling, but I don't know when it happened. I can't pick one day that I became experienced, but I don't know.
I love the social media aspect. And I think that's something that people have to get on board with. If you're a young producer and you're not, I posted this morning, ironically enough, well, like 2025, you need to figure out your brand. You need to know, you need to let people know who you are, what you do, and where they can find you. And I think that if you don't do that, you're gonna fail in this, especially in any industry, I would say, but especially in this industry.
For sure. Yeah, there's a ton of opportunity that wasn't there even 10 years ago for that kind of thing. So it's cool to see a lot of my fellow advisors growing and doing more branding and online stuff, social media, all that, podcast,
Yeah,
videos. So there's a lot of good people out there doing it, and we need more good people in this industry. So I'm always happy to help those young people have a conversation. And I don't get anything out of it, but I feel good to give back in that way. And I hope that it leads to more financial literacy. I hope that more good advisors means more clients are getting the help they need. I
exactly.
don't have the time to work with 350 million Americans, so we do need more advisors.
Yeah, yeah.
Um,
Yeah, no, I agree. I think the industry in general has a bad rap, whether you're in insurance or you're a financial advisor, everyone's scared to take that step if they don't know you to take you on as a financial advisor because they're like, are you going to screw me over? Are you going to sell me something I don't need? And so we
yeah,
need more good people wanting to help good people.
it's unfortunate that people see it that way, but there unfortunately have been some bad players in our industry. There's reasons that people are skeptical, so I understand it. I think we just have to push to get more good people in the business. I maybe also push the bad ones out. I don't know how to do that though. That's not my area,
Yeah.
but maybe the
Yeah.
regulators will crack down on something. But
Yeah.
anyway, we're run up against our time here. So before we cut it off, though, Alex, is there anything else you want to leave our listeners with, or anything that we didn't cover?
Oh, no, I think that's great. I think just have a plan. If you're a person that doesn't understand disability insurance, talk with your financial advisor and create a plan for 2025 if something were to happen to you.
Perfect. And where can people find you? I know you're on LinkedIn, but if somebody has questions for you directly, what's the best way to reach out?
Yeah, my email is the best, and I can give that to you to hand out. My cell phone is also always available, but I'm always on LinkedIn every day as well.
All right, cool. We'll share that in the footnotes here, and hopefully we're able to help some people out with this conversation. Thanks,
Yeah,
Alex.
man. Thanks for having me.
Absolutely.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Alexander Neri. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Alexander Neri or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Alexander Neri and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.